is we haven't got a fixed gold yuan rate. But I have no doubt that what he has done is he has put in place the ability to fix the yuan to gold for international trade settlement. So, and now we have, I mean, things have been deteriorating in terms of America's finances. And obviously I don't know what the Chinese internal advice is to if you like, it doesn't fall. Its currency doesn't collapse along with the dollar. And it's put the mechanisms in place to secure the value of its currency against gold.
Gold's wild price swings in recent weeks are increasingly being linked to speculative trading in China by some analysts, with U.S. Treasury Secretary Scott Bessent attributing the heightened volatility to unruly Chinese activity. The People's Bank of China raised its total holdings to approximately 74.19 million fine troy ounces, with reserves valued at roughly $369.6 billion. The move comes amid significant volatility in metals prices, which saw record highs earlier this year before a sharp correction. Financial analyzer and market expert Alasdair Macleod argues that China's technological and industrial rise has put it streets ahead in many consumer sectors, while the United States has been compounding economic mistakes. He suggests that beneath the surface, the U.S. economy is already in recession. While the West fixates on the Fed, China is quietly building the physical plumbing for a new world order. By expanding the Shanghai Gold Exchange into Saudi Arabia and Hong Kong, Beijing isn't just storing metal, it is building a gold corridor for trade. Macleod argues that this infrastructure allows the yuan to act as a gold-backed settlement tool without ever needing a formal peg. It's a silent coup against the dollar, anchored in physical vaults rather than paper promises. He suggests Chinese policymakers likely see the U.S. entering a debt trap, where persistent deficits drive Treasury yields higher and strain confidence in the dollar. In that context, he views reported reductions in China's U.S. Treasury holdings as a defensive adjustment rather than an aggressive move against the dollar. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Let's explore the latest insights from Alasdair Macleod's recent interview.
So when it comes to the relationship with America, America has been making all the mistakes. But there is now a change, I think, going on, Darryl, and that is that the situation in America is now so fragile in terms of the outlook for the dollar. There is absolutely no doubt that if you properly look at the US economy, it is in recession. Of that, there is absolutely no doubt. When I say recession, the only thing that is holding up GDP, which is a nonsense, it's only a measure of the amount of credit, if you like, for qualifying activities within GDP, is just credit. It doesn't tell you how that credit's being used. It can be gambled away somewhere, but it still counts as, as growth. The fact of the matter is that if you take the value of the budget deficit out of GDP, this year, last year, and the year before, America has been in recession. The private sector has been in recession. And that's the one that counts. And this is why unemployment is actually rising. But, the government controls all the statistics. And we believe what they say. They're telling lies, actually. The statistics are no guide at all. So on that basis, it is clear, I think, that the dollar is now under pressure. So we had a situation where, if you went back to the week after Liberation Day, April the 2nd, President Xi then actually went on the offensive, or defensive, if you like, but acted as opposed to just sort of calmly laid back. He went round the other ASEAN nations in Southeast Asia, basically talked to the leaders. He went to the main ones. He didn't go to all of them. But he talked to the leaders. Now, we don't know what the conversation was, but it was quite clear that it was all about maintaining free trade throughout the, if you like, those nations which are either dominated or have a very large element of the Chinese diaspora. And he also, and this is now actually sort of changed hugely because of the Japanese election. He also, along with Japan and South Korea, accelerated the talks towards a free trade area between those three nations. So these were positive moves for the first time by President Xi. And guess what? About a month or two later, the Shanghai Gold Exchange announced that it was opening vaults in Saudi Arabia and Hong Kong. We have seen further evidence that Hong Kong is being beefed up to be the international financial center for China, as its CIPS settlement system, the Chinese international payment system, really gets into a higher gear. And the whole concept, if you like, is that these vaults will allow, for trade settlement purposes, yuan, Chinese yuan, to be exchanged for gold. Now, what we haven't got is we haven't got a fixed gold yuan rate. But I have no doubt that what he has done is he has put in place the ability to fix the yuan to gold for international trade settlement. So, and now we have, things have been deteriorating in terms of America's finances. And obviously I don't know what the Chinese internal advice is to if you like, President Xi and his fellow senior ministers. But I would guess that they're making the assessment that the American economy is stalling, and that therefore the US is very definitely going into a debt trap, and therefore the yield on US treasuries is going to rise materially, and therefore they should advise private sector holders, under license of course, of US Treasury debt to reduce their positions. And guess what? That's what they did last week. So you can see that the indications coming out of China is that the Chinese now think that the dollar is on the verge of a collapse. Now, how long the collapse takes, we will see. But you can see which way this is going. And we should pay attention, if you like, to these moves because they are extremely important, particularly when you have a stock market with the S&P close to all-time records. You have bond yields tending to drift a little bit lower in this environment, etc. All these things are not looking quite so sure if you look at from China's point of view. And the other thing I would point out is if you look at commodity prices have been rising ever since COVID. And if you look at the CRB index, that's up it's 3 times what it was at the time, which means it's risen 200%. A lot of people have noticed this, but this is actually very, very important. So, from China's point of view, America, they don't need to do anything. America is just destroying itself. But what China is now doing is it's moving into self-protection mode. It's ensuring that it doesn't fall, its currency doesn't collapse along with the dollar. And it's put the mechanisms in place to secure the value of its currency against gold.
Alasdair Macleod argues that while the Federal Reserve could theoretically defend the dollar by raising interest rates, it is unlikely to do so because higher rates would destabilize an already fragile debt structure. In his view, this signals that the dollar is approaching its endgame, having functioned as a fiat currency since the collapse of the Bretton Woods system. He maintains that gold is true money, while currencies are merely credit instruments, increasingly losing credibility. Concurrently, Macleod contends that Asian policymakers are keenly aware of the risks facing fiat currencies and have been actively reallocating away from dollar-based assets into gold. The People's Bank of China has reported its 15th consecutive month of gold reserve increases as of January 2026, reflecting continued sovereign demand for physical metal even at high prices. This aligns with broader global trends as central banks worldwide have recently accelerated gold buying, driving what some analysts describe as the most profound shift in the global reserve map. At the same time, the US dollar's appeal as a safe haven has weakened, with major currency indices showing notable declines recently. Let's jump into the interview.
I mean, basically, we're looking at the end game for the dollar. The dollar is a fiat currency. It's not going to last very long now. So far, it's lasted, from 1971, end of Bretton Woods, to today. So we're looking at nearly 55 years. That's probably about reasonably good for a fiat currency, actually. That sort of length of time. But, it's over. It's over. I mean, the key to it is to understand that gold is money and everything else is credit. Okay, and that includes currencies. I mean, the thing that's amazing is that the economics profession doesn't actually understand this. They don't even understand how bank credit is created. They think it's sort of, I don't know, some sort of reserve multiplier, whatever, which isn't. It's not that at all. I mean, that's a separate topic. I mean, the point is they don't understand what the hell is going on. Everybody in Asia does understand, and they know what's happening to the fiat currency. They're getting out of it. And the way you get out of it is to sell it for real money, which, of course, is gold. And, you don't just look at the reserves on PBOC's balance sheet, because not all this gold goes there. In fact, I think a very small portion of it goes on to the PBOC's balance sheet. The rest of it, we know, is spread around various parts of the Chinese government, whether it's the People's Liberation Army or the youth wing of the Communist Party or whatever. It's all hidden in there. Call it some sort of huge, great wealth fund, if you like. And not only that, but increasingly individuals in Asia understand what's happening. And so they're getting out of, their own currency, in a sense, into gold and also silver. And this is creating, if you like, a bit of a crisis for Western capital markets. On top of that, when you got the BRICS Forum and you got the Shanghai Cooperation Organization and all the rest of it, there are obviously discussions, if you like, particularly in the sort of sidelines between the heads of central banks and so on, about the future role of gold for BRICS and also for the Shanghai Cooperation Organization. Now, that explains why quite a lot of countries, places like Africa, for example, are accumulating gold. They're trying to get away from holding fiat currencies, and particularly dollars. And this is why it's quite clear that the end game, as far as the dollar is concerned, will see it collapse. And the Chinese, meanwhile, will put their yuan, their fiat yuan, onto a gold standard, so it becomes a gold substitute. I mean, the only question we don't know the answer to is how long will this process take? The fact that China is now turning around and has very publicly told its investing institutions, who under license, because they have to be licensed by the PBOC to buy foreign bonds. Under license, they have been told, reduce your positions. We should listen too. Mm-hmm. So, and I mean, President Trump has also upset Europeans with his, if you like, his policy towards Greenland, where he's backed off that now. I mean, that was crazy. You've also got oil. We're beginning to see oil perk up. I don't know if you noticed, but oil this morning, having been as low as 55, we're now looking, 64 and change. So $64 for WTI. I think that's probably going to go a lot higher. I think President Trump will back out of doing something against Iran. So I don't think they'll close the Straits of Hormuz, because undoubtedly, if America attacked Iran, they would close the Straits of Hormuz. And I think Goldman Sachs reckoned that the price of oil would go to $300 a barrel. I don't think that's going to happen. But you can see that with a weakening dollar, all commodity prices are rising. It's not so much that the commodity prices are rising. Mm-hmm. It's a combination of two things. Firstly, it's the dollar going down. And secondly, the consequences of a fiat dollar for all these years has basically suppressed the value of commodities. So what we are seeing is the beginning of a huge shift in terms of commodity pricing. And the thing that amazes me is that very few investment analysts seem to think that inflation is no longer a main problem. They seem to think that interest rates can go lower. What are they looking for? 2 further cuts by the Fed in 2026? Come on. We're going to have commodity prices soaring. What's that going to do to inflation? It will soar, even at the consumer level. So, this is all very bad news.
While broader factors such as U.S. interest rate expectations and geopolitical tensions continuing to drive bullion demand, some analysts believe Chinese retail and institutional investors are playing an outsized role in driving volatility. Many analysts suggest that the correction may reset valuations and bring price behavior closer to underlying economic drivers rather than purely speculative momentum. If gold volatility today is merely the surface expression of a deeper monetary shift, are we witnessing the early stages of a new global settlement system forming around physical gold? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.